Money doesn't leak from your system, it leaks from the spaces between them.
Welcome back. I'm Thanya, your international finance and commercial strategist. Today, we'll uncover one of the most common causes of hidden financial loss, process leakage between R2R, OTC, and PTP. When these three financial engines don't talk to each other, money quietly slips through timing gaps, duplicated data, and unclear ownership. Let's fix that before the next audit does it for you. Every organization relies on three key financial cycles. R2R, record to report, converting transactions into financial statements. OTC, order to cash, converting sales into money received. PTP, procure to pay, converting purchases into payments. Individually, they work fine. But when they fail to connect, you end up with revenue recognized before invoicing, goods received but not booked, or payments made without matching invoices.
Money isn't lost from effort, but from broken processes.
Process leakage doesn't happen inside a process. It happens between them. It's invisible to dashboards, but visible in cash flow strain, reconciliation backlogs, and audit findings. Common examples include sales recorded, but invoice not issued. Goods received, but no accrual entry. Discounts approved, but missing accounting records. Manual journal entries, without cross-checks.
What looks like finance leakage is really a connection problem.
Governance isn't about bureaucracy, it's about building flow. Integrated governance ensures that data, timing, and accountability move seamlessly across all three cycles. Three elements define a healthy control structure. Single source of truth, all data aligned under one ERP or master ledger. Clear ownership, no gray zones where responsibility disappears, exception visibility. Dashboards showing unresolved items daily, not monthly.
Governance doesn't drag you down, it closes the gaps where profit leaks.
The first line of defense is the preventive gate, locking data accuracy and master integrity. Controls include dual approval for master data changes, mandatory three-way match, PO, GR, invoice, payment, automatic tolerance alerts, plus or minus 2%. For unmatched items. The graph shows how every payable should align across documents. When tolerance breaches, the system should flag, not finance staff manually discovering it weeks later.
Don't wait to fix mismatches. Stop them before they start. Ruck.
The detective gate focuses on finding what slipped through. It's where reconciliation analytics and exception reports take center stage. Best practices. Continuous reconciliation between AR, AP, and GL. Monitor open items beyond 30 days. Create leakage scorecards with red, amber, green indicators by process. The visual shows how a detective system helps prioritize attention. Red zones often sit where handoffs fail, like between OTC billing and R2R reporting.
If you can't see it, you can't fix it. Visibility comes first.
The corrective gate turns detection into improvement. It's not just about journal corrections, it's about learning loops. Recommendations. Monthly cross-process reviews involving R2R, OTC, and PTP owners classify leakage by cause. Data error, timing gap, or control failure feed root cause data into process redesign and training.
Correction without learning is repetition. Turn every error into design input.
Manual review cannot keep up with today's transaction volumes. Enter continuous control monitoring, CCM. Bots and algorithms that check financial integrity daily. Use CCM to detect duplicate invoices early or late revenue postings, unmatched goods receipts, suspense accounts aging beyond X days. The graph demonstrates automation as a proactive shield. The system highlights anomalies in real time, long before closing day.
Automation doesn't replace control, it amplifies.
To truly stop leakage, you need a borderless finance mindset, where teams share accountability across processes. Recommended cultural actions. Shared KPI. Cash integrity score equals % of reconciled transactions across R2R, OTC, PTP. Staff rotation across functions every quarter. Leakage review. Workshops led by internal audit.
Borderless finance turns control into culture, not mere compliance.
Organizations that close process gaps achieve measurable financial gains. Faster reconciliations and month-end close, reduced audit findings, more accurate working capital, stronger trust between finance and operations.
When your processes align, control creates cash, not paperwork.
Leakage between R2R, OTC, and PTP is one of the most expensive invisible risks. Fixing it doesn't require more control. It requires connected control. When finance, operations, and governance speak one language, your profit stops leaking and your numbers start leading.
If this changed your view of finance, subscribe in Thanya as we turn control into clarity and clarity into cash.